Good afternoon, everybody. My name is Chad Gilfillan, Senior Vice President, Investment Banking at Red Cloud. Thank you for continuing to join us with these presentations. Up next, we have GoviEx Uranium, and presenting for GoviEx is CEO Daniel Major. Daniel's going to talk about their portfolio of assets, uranium assets in Africa. There will be 10 minutes with 5 minutes for Q&A. If you do have questions, please do so, add them in the chat on the link for the chat. And with that, Daniel, I'll turn it over to you.
Thank you very much, Chad. Always appreciate being here at the Oktoberfest. I will, take you through a presentation of GoviEx and our development projects that are in Africa. Just for fullness, here's our disclaimer and our cautionary statements. GoviEx is very much an African-focused development company. We have a portfolio of assets, unlike most of our peers, which are single asset. Two of our projects are already mine permitted and are moving down the stages of the path to development. The primary focus is the Madaouela project in Niger, where we are focused on the completion of the final feasibility study in the first half of next year. We are following the Mutanga project about 2 years after that. We've got a very large mineral resource, but our properties contain considerable exploration upside, even though we already have long life projects. And then we have a third project, which is a very interesting exploration opportunity with a known uranium resource already on it. As I said, all our projects are in Africa. Niger is well recognized as a uranium producing country, being the 4th to 5th largest producer since the early 1970s. Very standard mining code, hasn't changed since 2006. Zambia, obviously a copper mining country, has been looking to diversify its commodity mix with a lot of focus on gemstones and gold more recently, and a country of one of 14 in Africa that has a path towards going nuclear with a focus on SMRs, small modular reactors, as part of that program. So very keen to get uranium production out of their country. And then lastly, Mali has now become the 4th largest gold producer in Africa, and is advancing through as a mining jurisdiction. I'll be very brief on the market because I'm sure there are others who presented on this as well. But effectively, what we're looking at is a strong demand going out on nuclear demand. WNA recently increased their position from 2% to 2.6% growth between now and 2040. Continue to be strongly driven by the developing nations of South and East Asia, and continued commitments towards clean energy from the developed parts of the world as well. On top of that, with the recent movements in gas price, oil price, and requirements for energy security, we've seen an increasing focus on nuclear again to be part of fulfilling those. Also, the IEA have been pressuring out to indicate there are other uses than just using nuclear for energy. It can be used in a number of items, as 2/3 of the power generated comes as heat that can still be used in other aspects that use carbon. The real factor, though, is the fundamentals on the supply side. We have about 190 million pounds consumed this year, about 128 million pounds produced. The rest is being filled by the secondary market. About half of that is coming from inventory drawdown, predominantly from utilities themselves, and the rest is coming from government sales, etc. Inventory drawdown has obviously been exacerbated by the actions of the financials, and particularly by Sprott and its buying, pulling down those volumes a lot quicker, tightening up the spot market. But at the same time, secondary supplies are expected to decline substantially, more than halving over the next 8 years. So without new supply, we're looking at about a 60 million pound gap that needs to be filled in 2030. That includes the closure of Cigar Lake within that time frame as well. We have utilities that are expecting to see a tightening market. Anyway, they're expecting price to go up, but the biggest issue, particularly for the North American utilities, are the fact that they're not covered really from 2024 onwards. They do tend to maintain a fairly low coverage, but this is getting pretty extreme. We have seen a number of US and European utilities now starting to put long-term RFPs out trying to understand where supply is going to come from through the rest of this decade. So where does that put GoviEx? With the rising price, we've been steadily improving and positioning our projects for development. We're currently in the position on Madaouela to complete our feasibility study, as I said, in the first half of next year, hoping to get it financed by the end of 2022, with 2 years of construction to be producing first uranium in 2025. Mutanga would then be sitting 2 years behind that in its development profile. The Madaouela project, we own 80% of it. The government of Niger holds the remaining 20%, of which 10% of that stake is free carry. It's right next to the Rationale operations of Cominac and Somaya, so benefits from all the infrastructure that the French have put in there, roads, power. There's people there for employment, with Cominac closed and Somaya due to close in the next 5 to 10 years as well, and considerable water. We have access to 8 to 10 megawatts of power free on the Sonajar power plant. We are looking at our own power systems as well with the solar hybrid option, simply to reduce our carbon footprint, but also reduce our reliance on government supplied power. We have a lot of water, but again, we're looking at the way we design the plant to try and reduce our water consumption, again, as we did in our PFS, to maintain a more sensible environmental approach. We updated the PFS in April, so it's very up to date. We made sure we loaded in everything we needed to, including transport costs, got quoted those all the way into the European and US markets, even to the level of pricing food for our employees. So it was a very detailed PFS, shows a 20-year mine life, cash cost of $22 a pound, $18 a pound in the first 5 years. The key here, though, was about looking at the project and how the debt market would examine it and how we could secure debt financing on it. Indications are about a 50-50 debt to equity ratio here, would be doing at a $55 price long term on the project. Since the beginning of this year, we brought in a gentleman by the name of Chris Lewis to do our uranium marketing. I've subsequently spoken to every US and Canadian utility and all of the European ones as well. So we are getting well positioned there. We are looking at the live RFPs and bidding on them where appropriately. With us, most of them a very long time to come through, but we are structuring that. We've also brought Endeavour Financial on board, whose skill set is investing projects in Africa and South America. They've got a long history of success in doing this. We brought them on now to help us make sure that the FS that we produce is a bankable FS, and that all our systems are in place, ESG systems, etc., that are required to secure the financing. As in the past, we did a lot of work on the Export Credit Agency, so we know there is a path to success here. We just have to make those steps go forward. So as I said, first half of next year would be completion of the FS, with financing potentially done by the end of the year. Unlike others, we do actually have our next project already lined up, other than just the brownfield expansion on Madaouela, but we've got the Mutanga project, again, already permitted. It actually was 2 projects that we put together. They had both gone to PFS. Then Denison expanded the Dibwe East property before we acquired it. That was done as an inferred category. Now what we're looking at is an 11-year mine life here. While Madaouela is probably the second lowest operating cost project in Africa, this is the lowest capital project in Africa. It's got a lot of exploration upside on it. We have started the drilling this year on the Dibwe East deposit to infill it. Certainly the visual imagery that we presented in a recent press release shows how there's a very good correlation and certainly potential for a bigger resource here. Next year, we'll focus on infilling that resource, doing the test work that needs to be done to take this one to FS, looking to by the end of 2023 to complete the FS on Mutanga. On Mali, we have 3 licenses here: Bala, Falea, and Medini. Medini is the one that runs north-south. It will not have any uranium in it. It doesn't have the capping laterite over the top of the Birimians with the sandstone layer. So we examine that from an opportunity point of view. We are very much part of 2 gold trend, but I think what's more important is the more recent work that we've been doing of trying to understand the structures and understand where it is that we should be drilling. Initially looking for these flatline uranium deposits, but certainly the results have come back to indicate maybe that's not what we should be doing. It's clear that there's a good correlation between the IP, gradient IP, and the uranium deposit. We've got a very large 2-kilometer long IP target underneath the Falea deposit. But what is interesting when you look at the bottom left-hand figure is there actually is a very large chargeability anomaly underneath that flat-lying uranium deposit, adjacent to the structure, which is what feeds the uranium. So next year, we'll be looking at drilling into that, trying to assess what is in that. That is the feeder that has brought the uranium, the copper, and the silver into the Falea property, and has brought gold in as well. So we are in a situation where the real target actually may be below Falea, not the flat-lying deposits that we've been looking for in the past. So very exciting, very much an exploration play, but with a lot of upside potential. Again, this year, getting ourselves ready, we've updated our board, brought in people with financing experience, particularly Salma, who is part of the SocGen team that did the Paladin financings and now operates businesses out of West Africa, which dovetails beautifully with Benoit Lassalle and his experiences in West Africa, and Eric Kraft, large shareholder, but also brings a lot of skills in the financing markets. We're well financed, and certainly we're well financed at the end of the half year. We've had a subsequent warrants, about $1.5 million exercised since then. We've got about $3.5 million of warrants that are well in the money, due in November, December. So we are well positioned to go into next year. We do have a debt on the balance sheet to the Niger government. It's non-recourse, non-interest. It is not due until July of next year. We are in discussions with the government to see if something can be done there. We do not know whether that's possible yet, but we'll see where we get to on that. But very good partners, the government, so we expect to be able to achieve something. From a market perspective of value, if you looked at the previous 2 cycles, Africa has been a great place for projects, whether you're going from a developer to being a producer, a la Paladin in the 2007 cycle, or the Africa takeouts, Makuja River, Huseb, Trekopi, all over $1 billion transactions, all in Africa. So we're very much on the development part, but we recognize there is a transactional aspect to African uranium projects. So just summarizing, very comfortable where the uranium market is, very much focused on development of our very straightforward projects. These are robust projects. We've got a lot of exploration upside on all of them, but the real focus is on development, and particularly on the Madaouela project. So thank you very much for giving me time to present. Appreciate it. Chad, can't hear you.
Sorry about that.
I'm sure it was a killer question.
We have a little bit of time for a question. When you look at GoviEx, certainly the big focus has been on Madaouela, but it's important to remember you have a portfolio of projects. So when you look to 2022, and as Madaouela takes greater shape, what do you need to do at the other 2 projects to take them forward? You mentioned the drilling at Falea, but specifically maybe Zambia. To make sure
Zambia, do the infill drilling. We know the test work was very similar for the 2 projects before. So it's really just completing that test work and then doing the engineering studies. It's a very simple project. It's a heap leach with an ion exchange plant. So basically an upside down ISR project. So really straightforward. So we would expect that 2023 is the engineering. By the end of 2023, it'd be an FS in place, and we can start looking at financing the Mutanga project into 2024, 2025. So that would be, kind of running behind Madaouela. Falea, obviously, until we know what's down in that IP anomaly, it's very hard to tell you what we're going to do with it. But certainly, if it is, then obviously that is a uranium deposit as well. Then obviously that's going to become exciting for us to drive forward. If it's not a uranium property, then obviously we'll look at it strategically, decide what to do with it, probably outside of GoviEx.